What's going on, everybody? Welcome back to another weekly video on real estate investing success tips. And this week I'm going to talk about something that has to do with real estate investing, but not directly, with real estate investing. And it's really the two metrics that I look at in terms of someone's wealth, or at least how I measure my wealth. Because a lot of people, there's mixed opinions on this. And a lot of people get in real estate investing and they want to, become wealthy. They want to make money. They want to build a big net worth up. And those are all great things. And if you want to do that, in my opinion, there's two things you always need to be looking at. Because if you have too much of one or the other, it can get a little tricky. So before I get into the details on that, if you're new to this channel, my name's Greg Helbeck. I've bought and sold well over 100 houses. And my goal on these videos is to provide value and to share lessons that I've learned in my life so you can watch this and obviously get value from it. So today I'm going to talk about the two financial metrics that I look at for myself and what you should look at if you want to keep becoming at least financially successful. So the two things that I look at for my own personal wealth are, number one, what is my net worth? And I will get into that in a minute, like how I define net worth. And number two, how much cash do I have in the bank, right? What is my liquidity, right? Because a lot of people love to talk about their net worth, but they have zero liquidity. And if they needed money for something, they don't have it, right? And then other people, on the other hand, are cash rich, but they're asset poor, right? So it's good that they have liquidity and they have the ability to jump on things. But, if they're not investing in assets, it's going to generally slow down their net worth building. So how do you define net worth? In my opinion, or really the way to do it, I don't want to say opinion because it's really just there's a factual, systematic way to do it, is you take everything you have that's an asset, and I'll get into that in a minute, and you subtract everything you have that's a liability, and the difference is your net worth. So for example, what I do is I take the cash that I have, I take the real estate that I own, and anything else that is valuable, even if you have watches or collectibles or gold or commodities, you take everything that has value, obviously within reason. You don't want to put like your office desk or your laptop or something, obviously, that they have value, but general things that are big ticket items. I would use a watch if that's the case. If you have a watch that's expensive, I don't have crazy expensive watches, but if you had a $50,000 watch, that would technically be an asset because that's the price of a condo in some rough areas, which is hilarious. But anyway, take all your assets, your cash, the real estate you have, your car if you own it, all that stuff, and you add it up in total. So what I do every month is I add up the cash in the bank and the real estate that I have. Those are my assets. And then I subtract all the liabilities. So what are liabilities? That could be a car payment. That could be a mortgage on a piece of real estate. That could be a student loan payment. That could be a credit card bill that hasn't been paid. That could be money you borrowed from your uncle, right? That you need to pay back. Anything that you owe money on is a liability. So the liabilities that I currently have is I have a lease on my car, which is a liability on me personally, which is I don't own the car, so I like leasing, and I guess I can make another video about that if you're interested, but I have the loan on a lease on my car. I have, and then I have real money that I owe on rental properties. I have mortgages that I owe on rental properties. Some of them are fixed long-term rental loans, and other ones are short-term hard money loans, but those are liabilities. So every single month, I take the cash that I have and I take all of the asset value. So I take all the value in the real estate that I own, the rental properties and flips, and I add all that up and it gives me one number. And then I take all the liabilities, the rental loans and the lease, and I add all that up. And I have my total amount that is the assets, and then I have my total amount that's liabilities, and I take the assets, I subtract them from the liabilities, and that number at the bottom is your net worth. That is how you track your net worth. There's software out there that does that too. I like to keep it old school and use a good old Google spreadsheet, but that is how you track your net worth. And if you want to grow your net worth, obviously you need to produce income, you need to buy assets, but you also need to track it, right? If you track it, you can monitor it and see whether it's going up or going down, how you're doing financially. So that's metric number one, is track your net worth. I'm telling you, if you start doing that, it will make you aware of it. And slowly, if you have a game plan, you will grow your net worth, and it can get pretty large, right? If you keep doing the right things consistently and persistently over time. Second thing I look for is cash in the bank. That is a very important number because especially if you are a business owner and you have overhead like me and most of my friends, you need to have a good cash position, right? I'm a big believer, and a lot of people say cash is trash, don't have any cash. And I completely disagree with that. I think cash is king, cash is peace of mind, liquidity gives you options. And if you're just gonna go buy a bunch of rental property and have, $5,000 in the bank, that's not probably the smartest thing in the world. I love to have a lot of cash. I love to have it available. And I always love to do flips and rentals in a situation where I'm not over borrowing and I have tons of liquidity that I can use in order to get myself out of bad deals, or if we have a couple bad months or something, I can use, that money to, my alarm's going off, to pay the overhead. So I like to keep an excessive amount of cash in the bank at all times in my personal and in my business. I love to save money. I'm a big believer in saving money, and some people think I'm crazy because I save money a lot. But at the end of the day, saving money is peace of mind. I save money for my bills. I save money just for saving. I save money to have fun. I save money to give away to people. I have my giving account that I've created. I save money just for personal expenses. Like, I want to go out to dinner. I want to do this. I want to do that. I want to get gas. I save money for all that, right? And I save money for taxes. If you're an entrepreneur or you're a 1099 employee or a 1099 contractor, you are going to get hit with tax bills if you're making money. So you got to save money for taxes. So those are the things that I save for. And when I take all the bank accounts that I have that are in separate, branches and buckets, if you add all that up, and on the Chase app, on the Chase website, it adds it all up for you. It'll say your total available balance, and that is cash in the bank. So you need to take a look at that and monitor that. And if you're an entrepreneur especially, you need to make sure that you are in a good cash position and you're doing your best to stay in a good cash position, because cash gives you options and it gives you peace of mind, especially when you're investing in real estate, which is generally a riskier endeavor. You want to be cash heavy. So that is my 2 cents on the 2 financial metrics that you should have and you should be growing. A lot of people love to pound their chest and say, "Oh, I do all these deals. Oh, I do 80 houses a month and blah 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 blah." But if the real truth, in my opinion, is what is that person's net worth and how much money do they have in the bank? You could be doing tons of deals and you could have no profit, and you could have a negative net worth, and financially you're really not worth much. So that is something you need to be watching. If you want to grow your wealth, these are the 2 numbers you got to look at: net worth, which I explained, and cash in the bank. And forget about the rest. Obviously, you want to grow your business, you want to do a lot of revenue, but you also want to have a lot of profit. So make sure you're keeping it simple. And hopefully this video is helpful. And if you're interested in talking more finance stuff, let me know. I'd love to make more videos about this. I really, really, really love this kind of stuff, talking about finance and numbers and net worth and cash and all that kind of stuff. So let me know your thoughts are. Also, if you want to partner with me and you want to do a deal with me in New York or San Diego or Delaware, San Diego's a little scary right now. I'd probably stay away from there. So mostly New York or Delaware. Email me, greg@velocityhousebuyers.com, and I'll see you on the next video. Take care.